There is a cruel joke the market plays on almost every trader. When you first start out, you do almost nothing right. You trade too big. You trade too often. You chase everything that moves. You lose money fast, so you do what any reasonable person would do. You decide, I need to be more in control. You add more tools, more screens, more indicators. You start watching every tick. You tighten your entries, micromanage your exits, tweak your rules after every loss. You feel smarter. You feel involved. You feel responsible. But your account tells a different story. The more you trade, the more you lose. The more you try to control every move, the less control you actually have. At some point, if you are honest, you ask a question that is hard to say out loud. How is it possible that I am working this hard, clicking this much, watching this closely, and I am still bleeding? The answer sits at the heart of this video. It is called the illusion of control. It is the feeling that the more you do, the safer you are. The more you touch, the better you perform. The more you monitor, the less you will lose. It is one of the most seductive lies in trading, and until you see it clearly, you will keep confusing effort with edge, activity with progress, control with responsibility. You will keep pressing buttons to quiet your anxiety, then wondering why your equity curve keeps sliding down instead of up. So let us talk about it. Let us talk about why the illusion of control is so powerful, how it hijacks your trading, and what it really means to take control in a game where you will never control the outcome. Because the moment you stop worshiping this illusion, you finally have a chance to build a process that works. Not because you touch the market more, but because you finally learn when to keep your hands away from it. Think for a moment about the last time you had a strong urge to do something in a trade. Maybe your position was slightly in profit. Then it started to pull back. You watched a few candles dip against you, and suddenly felt a heat in your chest. You did not want to see that green turn red, so you tightened your stop. You took partial profit early. You moved things around. A few hours later, you looked at the chart. Price had bounced from a level that was perfectly normal for your system. It went on to hit what would have been your original target. But you were not there anymore. You had cut yourself out of your own plan. In the moment, your adjustments felt responsible. You told yourself you were managing risk and protecting the trade. In reality, you were not managing the trade. You were managing your feelings. You were using action to relieve anxiety. That is the illusion of control. The belief that if you keep tweaking, moving, trimming, adding, switching, you can somehow force the market to give you the outcome you want. The market does not work like that. You can control your entries. You can control your size. You can control your stops and targets and the rules that tell you when to act. You cannot control what happens after you click. The more you try to, the more you tend to make things worse. There is a famous idea in psychology. When people are put in situations of uncertainty, they will often choose any action over inaction, just to feel they are influencing the outcome. Gamblers roll the dice a certain way. People in a storm hit the elevator button 5 times, as if it will come faster. Drivers weave through traffic for the illusion of speed, then arrive no earlier. In trading, the same instinct shows up with more zeros. You see a candle pull back and you feel out of control, so you add a new indicator. You drop to a lower time frame. You scalp around your core position. You switch systems in the middle of a drawdown. You are not actually adding control. You are adding noise. You are like a pilot in turbulence, shaking every lever in the cockpit, hoping one of them will calm the plane. The problem is not that you care too much. The problem is that you are trying to control the wrong thing. To understand how dangerous this is, you have to see the trap clearly. When you believe that more activity equals more control, you fall into a loop that looks like this. The market moves against you a little. You feel uncomfortable. You take action to feel safer. Sometimes that action works by accident. You feel rewarded. You start trusting your impulses more than your plan. Now, Every time you feel discomfort, you rush to intervene. You cut a winner at the first sign of pullback. You move a stop to avoid the pain of being wrong. You add to a loser because you cannot stand closing it. You reverse your position in the middle of a range because you are tired of waiting. Each move gives you a hit of relief. You feel like you did something. You feel like you managed the situation. But look at what has actually happened. Your decisions are no longer driven by edge, they are driven by discomfort. Your system is no longer the boss. Your nervous system is. The more you trade this way, the deeper the pattern goes. Losses hurt. So you click. Drawdowns hurt. So you click. Boredom hurts. So you click. Uncertainty hurts. So you click. You start using the platform the way some people use their phones, as a distraction from whatever feeling you do not want to sit with. You convince yourself you are in tune with the market. But if someone muted your PNL and hid the charts, most of your moves would be exposed as reactions to your own inner storms, not to any meaningful change out there. That is the illusion of control taking full possession. On top of this, modern trading technology makes it worse. The market used to be slower. If you were Jesse Livermore watching ticker tape in a bucket shop, you could not place 50 trades in an hour. You could not scalp every wiggle. There was friction. There was a delay between thought and action. That delay saved people from themselves more often than they realized. Today, you can click in and out of positions with a tap. You can trade on your phone, half asleep in bed. You can watch 5 time frames at once, with 20 indicators layered over price. You have more buttons than ever. You have less self-control than ever. The tools are not evil. They are neutral. But in the hands of someone who confuses activity with control, they are a loaded weapon. You start to believe that if you just find the perfect combination of indicators, if you just monitor every possible signal, if you just react fast enough, you can dodge every loss and catch every move. So you clutter your charts. You clutter your mind. You clutter your journal with constant system changes. And when it does not work, you do not think, I am overdoing it. You think, I need more information and faster reactions. You double down on the illusion. More alerts, more news sources, more screen time. You live in a permanent state of tense readiness, always hunting for the next trade, always asking, what am I missing? Or, what should I be doing right now? You know what suffers in this environment? Patience, clarity, edge, the very things that actually give you control over your long-term outcome. The hard truth is this: the part of trading you can really control looks boring from the outside. You can decide which setups you are allowed to take. You can decide how much of your capital you risk per idea. You can decide where your plan says you are wrong. You can decide how many trades you will allow yourself in a session. You can decide when you will walk away. Those decisions, made calmly ahead of time, give you real control, not over each trade, but over the distribution of outcomes across many trades. But that kind of control does not satisfy the part of you that wants to feel powerful right now, the part that wants to feel smart on this candle, the part that wants to feel in charge in this moment, the part that cannot stand the thought of letting the chips fall without your hand constantly rearranging them. So you sacrifice real control for the perception of control. You trade more often than your system requires. You interfere with trades that would have worked without your help. You try to fix randomness with micromanagement. You exhaust yourself. No wonder the more you trade, the more you lose. You are not losing because you are lazy. You are losing because you are trying too hard in all the wrong ways. So how do you break this illusion? You start by accepting a painful fact. In trading, doing nothing is a decision. Not clicking is a decision. Not adding is a decision. Not moving your stop is a decision. Not reacting to every flicker of price is a decision. But it only becomes a real decision when it is chosen, not when it is forced. If you sit on your hands because you are frozen, that is not control. That is paralysis. If you avoid pulling the trigger because you are terrified, that is not patience. That is fear. Real control is when you could do something, you feel the urge to do something, and you say, "No, my plan does not call for action here." You are not passive, you are selective. To get there, you have to design your trading in a way that makes doing less the default, not the exception. For example, instead of sitting in front of 5 markets all day long, waiting for something to happen, you define exactly when you will scan, exactly what you are allowed to trade, and exactly how many trades you are allowed to take. You turn always watching, always ready into these windows, these setups, these limits, because if everything is an opportunity, you will feel compelled to control everything. The illusion of control thrives in vague environments. When you do not have a clear definition of what a valid trade looks like, every move feels like it could be the one. You feel responsible for catching all of them. You cannot rest. You cannot stop clicking. When you do not have a clear rule for how many trades you can take in a day, every new idea feels equally urgent. You chase and chase and chase. Structure kills the illusion. When you say, "I take at most 3 trades per session, and once I am done, I am done," something weird happens. You become more careful about which trades you choose. You become more patient waiting for them. You start to realize that passing on 10 mediocre opportunities is not losing control. It is exercise of control. The urge to click does not disappear, but it stops being the boss. The next step is to separate trade management from emotion management. Right now, you probably use the same set of actions to deal with both. You move stops and targets, not just when your plan says to, but when you feel anxious. You close trades, not just when the system tells you to, but when the noise in your head gets too loud. You add trades, not just when there is a new signal, but when you cannot stand waiting. You are using trade actions to regulate your emotional state. That is unsustainable. You need other outlets. You need to be able to calm yourself down without touching the position. You need to be able to feel fear without obeying it. You need to be able to feel boredom without manufacturing trades. That might mean stepping away from the screen for a few minutes. It might mean standing up, breathing, writing down your urge before acting on it. It might mean having a pre-written checklist that you must look at before any mid-trade change. For example, before you move a stop, you can force yourself to answer 3 questions on paper. Does this change align with my written rules? Is this change based on new information from the market, or just a change in my feelings? If I saw someone else making this change, would I consider it professional? If you cannot answer those clearly, you do not touch the trade. This creates a gap between the moment fear hits and the moment you act. That gap is where real control lives. Finally, you have to redefine what it means to be a good trader in your own mind. Right now, you might think a good trader is someone who always knows what to do, who always finds the trade, who is always in tune with the market, who always reacts quickly and decisively. That picture feeds the illusion of control. It makes you feel that if you are not constantly engaged, constantly adjusting, constantly doing something, you are failing. What if you changed that definition? What if a good trader, to you, became the person who can let a valid trade breathe without interference? What if a good trader, to you, became the person who can sit in cash for days because their setup has not appeared and feel no shame? What if a good trader, to you, became the person who controls their risk and their behavior and accepts that everything else is noise? That kind of trader does not look like a superhero on social media. They do not have flashy screenshots of 10 trades per hour. They do not post every time they click the button. But over years, they tend to keep something the busy trader loses: their capital, their sanity, their edge. The more you trade, the more you lose is not a law of nature. It is the natural outcome of living inside the illusion of control. When you stop believing that every move needs your hand on it, your trade count may drop, your screen time may drop, your feeling of constant intensity may drop, but your ability to actually influence your long-term results will rise. Because now, you are not fighting the market. You are managing the only thing you ever really had a chance of controlling, yourself. So the next time you feel that familiar itch to do something, ask yourself a new question. Am I about to exercise control or chase the illusion of it? If the honest answer is illusion, let the candle close, let the bar finish, let the plan play out. You will not win every trade. You were never supposed to, but you will finally stop losing for the worst reason of all. Not because your system had no edge, not because the market was unfair, but because your clicks became a way to escape discomfort instead of a way to execute discipline. When that stops, something else can finally begin. Real control. Not over the market, but over the way you move inside it. And that is the only control that ever truly pays.